Ladies and gentlemen, welcome back to the Sigma Real Estate Studios. I'm your host, Jimmy O'Done, and certain housing markets are still flying high. And today we're looking at single-family homes in Westchester County, New York. For the first time since July of 2020, mortgage rates have now gone above 3%. There's more and more people every day getting vaccinated, and the economy added roughly 355,000 jobs in February. Inflation's on the rise, price of oil has gone up, and the stock market has gone down. We've had a major correction in the stock market due to volatility and inflation and mortgage rates, and there's so much going on between the tail end of February leading into March. So talk about a mouthful here. We didn't even jump in yet, and we can see that there's a lot to talk about, a lot that's going on, and a lot to track if you're in the process of buying a house. So where does this leave the real estate market? First, let's take a look at our current numbers just in for the month of February. And don't forget to stick around until the end to see my prediction on this so-called market crash. Let's go. First up, median sales price. Now, this chart is starting to look a lot like King Ka, well, right before the fall anyway. So for the month of February, we only went up $1,500 to $754,000 compared to the month of January when we were at $752,500. So not much, okay? Now let's take a look at this right now for a second. We've been going up 20,000 month over month, and then that became 10,000 month over month, and now we're only at 1,500. So is this a number to truly keep an eye on? I think so. I think this is showing us a lot of information that we need to know. And depending on which way this goes into the next month, we could either see the market begin to soften and prices coming down, or we could just see kind of plateau and then another rise up. I'm going to go with we're going to still see a rise, but we'll see what happens. Second up, new listings. So new listings in February came back at 8,753, which is down from 9,009 in January. So we have prices slowing down, but we also have new listings dropping. Good news for sellers, bad news for buyers. Third up, pending sales. So pending sales rose from 7,029 in January to 7,102 in February. So sales are still going up and listing inventory is still going down. Another great sign of great news for sellers, bad news for buyers. Fourth up, days on market. So this is how long it takes for a home from when it's listed to go under contract. Now we can see numbers falling from 36 in January to 35 in February. But this number is like kind of a trickster because most homes that have accepted offers are getting them in under 10 days, whereas it might take an additional 2 to 3 weeks for it to go under contract. So although we're looking at these numbers, I would say these numbers are definitely closer to about 10 to 11 days on market before they get an accepted offer. Using these four indicators, it seems that the market for the month of March will perform well. Now, the key indicator we need to continue to watch this month will be inventory and days on market. What's really different this month compared to the last 6 months is how much the rise of prices is slowing down. This is the most important number I will be watching over the next few weeks into April. Here's where the analysis gets a little trickier in predicting this month. We have more and more people getting vaccinated. If we begin to reach herd immunity, the question will remain whether buyers will still want to move into the suburbs or if they will stay in the cities. One thing is for certain, roughly 30% of new buyers have been experiencing buyer's remorse after buying a home so fast and not really wanting to live in the suburb areas. They were trying to run away from the dangers of COVID, and with those dangers decreasing day by day, many are looking back to the city. So we might see a lot of these people that bought properties originally, right, throughout from COVID until now. We might see a lot of those people end up putting their properties back on the market and making their way back to the city. So there's a lot of stuff that's going on right now. And this is going to play a huge role this month and the months to come. So is the market gonna crash? No, I still don't see a sign of the market crashing. 2008 was extremely different in terms of just the types of mortgages that were allowed compared to now. I do, however, see prices leveling off as COVID starts to fade away in the future. But again, really, it's all supply and demand right now. And how that continues to move forward will really determine the prices. So overall, we still have the lowest available inventory since 1999. What I recommend is always look at hyperlocal statistics as well based on the home that you're shopping for. Because just because the broader market's going up doesn't necessarily mean that that's what's going to happen to the home you're looking for. There's certain price points that don't follow the trend. Always do your research, always look hyperlocally, and as usual, if you want to be notified when the next video comes out, I mean, we do everything from buying tips to selling tips to local food reviews, then go ahead, hit the subscribe button, ding the bell, and I will see you back here next time. I'm your host, Jimmy Odone, and I hope that this market update is able to shed some light.